the computer. Should I watch it? Turn on volume off as well.
Where's the link?
Mad sound effect. Oh, cool. Come in. I like it now.
Okay, I'll share that to the group now. Yeah?
I'm going to sit down now, so you get time.
I'll share that to the group now. Yeah?
I'm going to sit down now, so you get time.
Should that come through now? Hello everyone, welcome to the live webinar. I'll just give it a few minutes to let people start filling up, coming into the group. Hello everyone, welcome to the live webinar. I'll just give it a few minutes to let people start filling up, coming into the group. See everyone talking in the chat. Hello to everyone. Live webinar. Just give it a few minutes to let people start. The wizards in. Coming into the group. See everyone talking in the chat. Hello to everyone. Live webinar. Just give it a few minutes to let people start. The wizards in. See everyone talking in the chat. Hello to everyone. Just give it a few minutes to let people start. The wizards in. Okay, cool. Can you all hear me? Is the sound better now? Okay, cool. As I said, everything's going to be saved. So everything that we go over, it's going to be saved so you can review it at any time. If you feel that I'm going over things a little bit too fast, breaking down the charts and so on, it will be saved so you can review this at any time and go over it. So obviously, first of all, sorry for the delay in the webinar. There's a few technical issues that we've been trying to sort out and basically trying to do things with Discord and have the webinar work there. But obviously, we've just used the YouTube now because obviously you guys are used to using the YouTube from the morning calls and the evening calls. So we're just want to keep a similarity so everything works the same. So I've got quite a bit of a list here. When I asked you for your comments or your questions and so on, there was a lot of questions. So I kind of tried to look through what the main questions were. And as is the first webinar, I'll go over the key principles, the main important things, which I've explained many times already in the group, which is risk management, just patience, self-discipline, the things that matter the most, that are the core of becoming a successful trader. I keep saying this on a day-to-day basis. You're probably a little bit sick of me saying it constantly. Obviously, there's new people in the group all the time, so I keep repeating myself. But also, people that have been there since day one need to keep hearing it, because I know what it's like when I first started trading, and risk management just goes out the window sometimes. You win a couple of trades, you forget about risk management. You don't want to trade 1%, like I'm saying, because you just want to keep over leveraging and stuff like that. So I'm going to go into that a little bit today. Let me just check the comments and see that everything is working. Okay, let me just have a look. There seem to be a few problems. Let me just see if I can fix this. 1 second, guys. I just want to make sure everything is working 110% before we get started. Let me just sort out a little mic here. 1 second, guys. Sorry, give me a couple of seconds, guys. I'm going to just having a little look to see if I can just change the microphone. Okay. Let me just see. Right. Has that made it any better? Is the sound better now? The internet's good in London. It might be wherever you're from. The sound should be working. Internet's good. Everything should be fine. Cool. I'm getting more yeses than no's, so I'm going to get cracking. So yeah, today was busy day today in the market. I was quite active, obviously, with that ECB news coming out. So I'll go over that today. There's loads and loads and loads that you want to get through. So basically, because there was a delay on the webinar the last couple of weeks, I'm going to do a webinar this week, and I'm going to do another one next week, because there's so much to cover, and there's so many questions to go over. But today I want to basically go over what the key principles are, and I also want to go over the main thing that people, the biggest request that I had from everybody was to basically go over how to do top-down analysis. So I got loads and loads of requests to ask how to show key levels, monthly levels, weekly levels, like you see on my charts, how to do top-down analysis from the monthly, weekly, daily, 4 hour, and so on, and how to break down a chart from the very beginning, right down to looking at entries. So I'm just looking at the comments just to see is everything is all right. Can everyone hear me? Can everyone just let me know if everything is okay? All right, we've got fine from Kosovo. Everyone else is saying yes, everything fine. So guys, if there's a problem, it's got to be on your own computer. The Wi-Fi is very good in London, so there can't be a problem. So remember, this is recorded, so you can look back on this. Everybody's saying it's fine. So let's get cracking on. So yeah, today was a busy day, like I said. Lots happening in the market. So I want to kind of concentrate on that, because today was an important day, seeing how the market reacts to news coming out. basically a strategy that we've been using quite a lot, especially people that have been here from the start, seeing that breakout of that range, seeing a retest of that range, and then the big explosion higher. So I want to go over that and explain that in a bit more detail. As I said, I'm going to go over a couple of pairs and show top-down analysis. So going from the monthly all the way down to sort of the 1 hour, 30-minute and 15-minute chart. And then I'll go over some questions and answers. There's a lot of questions coming through, but hopefully by doing the top-down analysis and so on, I'll be able to go through some of that. So the key things I want to talk about as well is the risk management, as I said, patience, the self-discipline that you have to have, and then I'll go over a few questions here and there that you guys have asked for. I said I do have a list. There's lots to go over today, but let me jump onto chart. I'm going to choose USD. I'm going to choose charts that we're actually looking at the moment. There's no point choosing easy charts to sort of find support and resistance. Let's look at charts that we're looking at actively right now in the market, and we can see how I do the top-down analysis and how it works. So I'm just going to bring up the USD CAD chart and make that full screen. I'll jump back to me in a minute when we start doing some questions and answers shortly. Okay, now you guys should be able to see my USD CAD chart. Let me just check it's working when I'm moving my mouse. 1 second, guys. Yeah, okay, so everything is working fine. So USD CAD, obviously we're looking at we're in short trades on this at the moment. So I'm just going to show you a chart that I've already got on here. Obviously got my key levels that you guys have seen. And what I'm going to do is just clear it all off, start from the very, very beginning, and then show you guys how I break it down. So if you see me pause at any point, I just want to look at the messages. Obviously, it's the very first webinar, so I just want to make sure that everybody is hearing this and everything is okay. Okay, so USD CAD. So let's delete this off completely. So I do like a clean chart. You see, when I actually analyze, I often just have a clean chart because being in the market for so long, I know key levels in my head, and often I like the charts to be nice and clear because when it's clean, sometimes it just shows you price action a little bit better. But when you do have lots of different levels, you need to make sure that it doesn't clog up your chart too much and stop you from seeing what exactly is happening with price. Now, this is how we do top-down analysis. So firstly, we go to the monthly chart. And what we need to do is you kind of need to zoom in to this area here. I'm going to jump back. Again, there seems to be a lot of the volume. Let me just see. Is it any better now? Again, there seems to be a lot of volume. Let me just see. Maybe better. I'll play back. Just let me know one more time if the volume or if you can all hear me okay. Okay, cool. I'm going to get cracking on. And then, as I said, you can hear back on it. So, USD CAD. So, when you're doing top-down analysis, top-down is starting from the very top. And what we call top is monthly. So, what you want to be looking at on the monthly is the price action around this area. Obviously, we want to look back in history, but we want to be looking around what's happened in the last sort of year or 2 years and see what price action's been doing around here. Then we can see if it lines up with further back in history. But really, you want to be looking at what's happening in the most recent times in the market. So first off, just get a support resistance line, a horizontal line, and pull it onto your chart. Once that's on your chart, then you can just start moving it around and just seeing what lines up. And when you're practicing this by yourselves, you can just start using this as a practice tool. Now, what you've heard me talk about many times is the round figures in the market and the significant levels. Now, there's a reason for this, which I'll go into in a little bit more later on. But the market likes to work off round figures. It likes to work off round numbers. For instance, I've explained before, if you can imagine if you've got a worldwide global company like, let's just say Coca-Cola, and they're taking their money out of Europe and turning it into the US dollars. They want to be doing it at the right time in the market and at round numbers, not silly numbers which are, say, for instance, USD CAD 1.31143. They want to be doing it bang on at the levels of, say, 1.300. Big banks, they move money around at these key levels, and that's why you see money or the price bounce off these levels so much. So these levels, you can see time and time again, they work, and this is how you actually find them. So first off, looking at this is last month and this is this month. So obviously big bearish month last month on USD CAD, big 1, 2, 3, 4 weeks, 4 months engulfing in 1 month on USD CAD. So what we want to look out for is the nearest support. So when we're coming around here, obviously we want to stick to round figures when we're finding support or resistance on the monthly. So you can see here there's a round figure of 1.3100. And guys, the easiest way to find these is just double click on support and resistance. You can go clear this and put in the figure that you want. So we've got 1.3100. So you can see here, this works, but not great. As you can see, it's cut through price here. The work to support, resistance, support, but it's cut through price here. You don't really want to be cutting through price. You want to be really just hitting the support and resistance levels. So we can see 1.3100 isn't working around this level of support on the recent monthly. So let's just move that down slightly. Let's go to 1.300. Again, you can just double tap to make sure it's on it perfectly. And obviously, yeah, we haven't hit this right now, but that doesn't say that we're not going to. Let's see how it looks in the past. You can see here resistance, perfect resistance here, support, and then you can just see how it's working. So then what we want to do is then zoom out and see how it lines up. And then you can see over here, it's worked previously on a monthly, very, very strong. Resistance. Going back even further, we've got support, and then we go back to beginning of when the chart started. So that has given us a nice round base and a nice figure to start with. Let me just quickly jump back to the chat. Okay. So that's how we get the first support. Now, rule of thumb that you want to work by when you're finding your monthly key levels is, sorry, mistake there. The rule that you want to work by is you never want your range to be bigger than 1,000 pips. So you never want to go more than that. It's too wide for the monthly. So you never want to go more than 1,000 pips between each range. So once you get your range here at 1.300, we can just think, right, well, normally the market works between 500, 250, 500, 750 or 1,000 pip ranges. So we want to start off with breaking down the market by starting off with 1,000. Let's see how it works within the 1,000 pip range. So we got the 1.300. So the next 1,000 pip range above is 1.400. So what we can do is just, rather than trying to find it and get it perfectly, just write that in to the coordinates. And then you can see here, we've lined up perfectly. 1, 2, 3, evening star formation on the monthly, but we're not looking at that right now. So you can see here, okay, that works out well, 1,000 pip range. So let's look at 1,000 pip range below. We get the level out, double tap, and we go to 1.200, and we see how it lines up. Now we've missed it here, but we can see it has worked back here. So we zoom out now and we see how did that work in previously. We can see here on the monthly, remember monthly rejecting these levels means they're very, very strong. The higher the time frame, the stronger the support or resistance or the candlestick formation. It means it's stronger than the lower time frames. So here we got support, 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 support over here. Even this resistance over here, see that perfect resistance there, resistance. And then we just go back to more history, resistance, resistance. And you can just see now, we zoom out there on the monthly, see how perfectly that lines up. So we found our monthly ranges at the moment. So what you see is on my charts a lot of the time is the sort of highlighted region. So the way what I do is on the monthly, you get a rectangle here. You want it to be about 10 pips or 15 pips either side of this range or of this level, because even though you can see here we work perfectly to resistance, we don't always manage to hit it exactly. So you want to sort of have a highlighted region where price can come up and test, because we might not always hit it to the exact pinpoint. So what we do here is highlight this, and then we move it to each one like that. And then we do the same, just clone it, and then you have your sort of monthly region. Now, you see on my chart, sometimes I don't have that anymore. I like to keep it quite clean. By eye, I like to just kind of have it as clean as possible. Let me just take the yellow around these edges off. I like to have it as clean as possible, but that's the monthly range. So that's what we need to do. But we can come back to putting those highlighted regions on. I'm going to take them off, but that is how you do it. And then what we do then to get the weekly range is literally working out the 50% or working out the halfway in between each one. Obviously, you can work this out to what the figure is, but an easy way to do it is get the Fibonacci tool, and then you can just line it up perfectly. And then you can see there, we just get a support or resistance, the horizontal line, pull it on the 50%, which is halfway in between this range. Remove this Fibonacci away. Do the same between the second monthly region. Delete that Fibonacci, and then we can see we've got our weekly levels. So what we can do here, what you also see on mine, is actually mark these up. So on this, you can double click, you can go to style and go to monthly resistance at 1.400. You can do the same here. So you can go monthly support 1.300, and then obviously down here to do the same again. So that's our monthly charts and weekly charts sort of set up now. Obviously, I just do it just so you can see here. I did take them away, but if we got these highlighted regions, these show the monthlies so that we can distinguish easily between the monthlies and the weekly. But here you can just see now, just by doing that simple tactic, you can see here we've got this high region. You can see how on the weekly we find resistance, 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 resistance through here. And you can see lower down in this monthly range, we've found support perfectly there, literally to the pip. And we've found it a couple of times since. So you can see that's 1.2550. So then you can see again how the market works towards these levels perfectly and hits these. So that's on the monthly. Then we drop down to the weekly. And then what I use on, so that's basically our chart set up now at the moment. That's the top down from the monthly down to the weekly. We've got the monthly levels, we've got the weekly levels. As we jump down to the weekly levels, we can see here how well it works. Just come down from the monthly, we can see on the weekly here how perfectly it worked, how the resistance, 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 how it works time and time again. So the next stage, so I'll just quickly check the chat to make sure everything is okay. Everything seems fine in the chat. So at this stage now, we have market structure. We can see, rather than just having a blank canvas, we can see what price has been doing. It gives us a bit of an idea as to why price has moved around, why it's found support here, why we found resistance here, and rather than it just free flowing and not really having any direction. Now, the next thing is to find out the direction. So what we need to look out is the trend. So the next thing is the trend. And what many people don't really realize with trend lines is there's three types of trend lines. There's an outer trend line, there's a long-term trend line, an outer trend line, and then there's an inner trend line. So what I'm going to show you here is the outer trend line. Often we don't need to have these on our charts, but it's good when you're breaking down top-down analysis from the monthly down to have a look so you can understand. But on a day-to-day, if we know that there, we can sort of take them away because we don't need them clogging up our charts. But in this instance, it's quite good to have it on USD CAD. So this is the outer trend line on USD CAD. Wick to wicks, I always go to the wicks on my trend lines. We can see here 0.1 down here, 0.2, and you can see how well market reacts to trend lines. They're very, very, very strong. Trend lines are one of the key things to use in your trading. They work time and time and time again. If you look back in any history on any chart, you'll see how well they work. So here you can see on a weekly 0.2, 0.3, which I mentioned the last couple of days, how it's always the strongest point on the trend. Any 2 points make a trend line. The third point is usually the make or break, and you can get a very big reaction. So see this third touch here, and we haven't come back since. So we have now tried to come back towards it here for a fourth touch. We came very, very, very close. Haven't hit the 1.300, which is one of the reasons why I'm looking at this coming down and taking this level out. Because as I've said a couple of times, when we get that close to a monthly support, we normally 90% of the time we hit it. So that's the outer trend line on the daily. Oh, sorry, the weekly. Then we also have an outer trend line here. Again, you can see how it's worked, 0.1, 0.2, 0.3, and we push down. So now we're sort of getting trapped between these two, and we need to see what's where it's going to go next. So we can see that at the moment, the direction is down on a weekly. We've hit this trend line, we're pushing down, and we're making our way to the bottom of this trend line. Now, that's the long-term trend line. Then we had this outer trend line here on this uptrend that we were in, but we broke that. And like I'll show you in another example on another chart in a minute, when we break out of a trend like this, what we normally do then is make our way slowly towards the next trend line. So that's why we have inner, outer, and long-term trend lines. At the moment, there's only a long-term and an outer trend line to show you here on the weekly. But you can see once we broke out of this weekly trend line, we then push down, and we usually come down and tap that next trend line and find support resistance around here. So I am looking for price to come down to sort of this level. So that's how we work out the direction. We can see here on the weekly, we've broken out this trend. So the trend is down. We're coming down to this outer trend line here. So we're going to keep that on. We can get rid of this one for the moment because we don't need it. But we can see now that price action is coming down towards this trend line, and we're very, very near this support. So far we've done the key levels. We've done the monthly resistance, monthly support, weekly levels. We're finding a direction on the weekly. So we're seeing that the trend is down. So we need to drop down to the daily chart now. So we had the long-term trend line, and so we had the long-term, then we had the outer, and then this is the inner trend line. And let me change that. The inner trend line is the inner trend line, called that for a reason, because we'll just go back out to weekly. So we've got the outer trend line here, and then we've got the inner trend line. So we've got the outer trend line, which is on the outside. Then we drop down to the daily chart or the 4 hour, and that's where we get the inner trend line. That shows us what's happening and what direction the market is going in in the more recent with current price action. So overall, we can see what the direction of the market is. We've seen this rejection here on the outer trend line, so we know it's coming down. We know we've got this outer trend line down here as well. So we have an idea that price can push down here, but we can get rid of this one for the moment. So we've got the outer trend line, and we now got this inner trend line. So again, as I said, trend lines are very, very, very strong and work very, very well in the market. We can see now that if we zoom out on the daily, we can see the overall trend is down. Just flip back out to weekly. So we've got 0.1, 0.2, 0.3, and we're pushing down. So the trend is down at the moment. All we need to do is really look at the daily chart, and we can just see that we're making lower lows, lower highs, lower lows, and that we've just literally been coming down for the past however many days, the last couple of weeks. So we can see that the trend is currently down, and this inner trend line is showing us the same thing. This shows us the direction of the market. Now price has come back up to retest this, and this is what we're looking at now and why we're looking at shorts. So we've had a push down here, a lower low, a lower high, making lower lows and a lower high. So that's the next thing that comes into the market. Once we figure out the sort of direction, so we put this trend line on, even if price hadn't reached here yet and we were back here, just by putting on this trend line, we can see that price is actually in a downtrend. It's moving downwards, so we know what the direction is. So looking at that, then we then need to look at market structure. Look at higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and keep going, higher highs, higher lows, and then until we get to a point where we can't make a new higher low. You can see here that we're making a double bottom. That's why we had the range on last week, and we were looking at a reversal from here, because price is starting to struggle to push and make a lower low, even though we're very close to the monthly support. Now we have pushed up, and we're trying to break higher, but we are stalling around the last lower high. So if I just show this again, lower low, lower high, lower low, lower high, lower low, lower high. So this is the last sort of lower high here. So we're coming back up to this today. We've rejected it once with a shooting star on a daily, and we look like we're going to roll over to the downside. So once we've done the trend lines, then the next thing we need to start looking at is price action. So we know the monthly support, the monthly resistance. We know the direction of the market by using our trend lines. Now we know the market structure by looking at lower highs and lower lows, and vice versa, higher highs and higher lows in an uptrend. If we're in an uptrend, higher highs, higher lows, higher highs, and so on. So once you've worked that out and you label that up, what's a good tool is to keep doing that, using that lower low and lower high tool. Actually just putting on your chart the last lower high, so you can put it there so you know that price can come back up and retest that level before pushing down. But what we need to know is that if price breaks above that last lower high, like we're trying to do today, if we break above this and close, then this last lower high is invalid, and it looks like we may be pushing up. So we need to watch this, but we'll get back to that later. So once we know the direction, the next thing that we need to look at is price action. So we know that we're in an area here that we're looking at trend line resistance, and we need to start looking at price action because it tells us everything that we need to know. So on the daily, every evening, it's very, very important on the evening close at 10 o'clock. That's why we have the evening call, is to look at the daily candlestick close, because it gives us a good insight on what's happened that day and what's going to happen the next day. So here we've come up, we've rejected this resistance level. We've struggled to break any higher, so it's given us that we're going to push back down. Now that we've seen it on a daily, we need to drop down to the 4 hour. Just gonna have a quick check in the chat. Okay, everything seems good. So yeah, we dropped down to the 4 hour, and this is where we need to start sort of zooming in to price action and seeing what it's telling us. So here we can see we've pushed up here. We know that this area is, we're coming into resistance from the trend line. If we're going to reject it, more often than not, we reject it like we have here and we push away, but we've stalled. But what I just want to look at is just price action here. We can see we've had resistance, resistance, and we come back up, had this resistance again, had the signs that we wanted. And regardless about our USD CAD trade at the moment, what you have to remember is not every single trade is always going to win. So you have to go with what the market's telling you. If we know that in this instance that we're in a downtrend, we've just hit the trend line resistance, we've just hit the last lower high, so that's 3 confluences already. We come back up to retest this resistance here. We've got a tweezer top formation, almost bearish engulfing as well. That's another confluence. So all of these things start adding up. So you have to take the trade. Whether it works out or not, you risk 1%. You risk what you need. You risk that on a trade, and you don't worry whether the trade loses or not, because our wins outweigh our losses. And any small little 1% loss, as you can see with the trades that we have, a small little loss here of say 1%. But if the trade does go in our favor, then you can see here we come down to 1.3. We've got more than we've got 2%. We've got about 2-to-1 ratio here. You can see this risk reward ratio here. And if we drop any lower, then it goes 3, 4, 5%, all for that risk of 1%. So at the moment, top down analysis, we've got this. We've got the 4-hour. We're looking at price action. And that's what we need to look out for. So here we've got getting all the signs. Put the trend line across here, and you can see we've had that rejection. So everything's there telling us to take the trade. Now we push back down. We've been struggling here, and this is a tool that I use a lot. As you guys know, it's very, very good, because when the market is deciding where it's going to go next, or for the next big move, what we often get is a bit of consolidation. So we've had this big impulsive move here from the lows, pushing back up, and now we're having this consolidation around here. We tried to break lower, we failed, big push back up, and we're trying to break higher. Now, yes, we may break higher and we may push up to the upside, but you can see at the moment on the 4-hour, price is telling us that once again, we're finding resistance. Now, when I told you about this trade, I explained that the trade was good to take, but we may push up and try and take out this last high here, because the market knows a lot of people are trying to take a short trade here. So anyone that's taking a trade here with their stop loss is too tight, what we want to do is come up, take them out before making that bigger move down. So we'll keep an eye on this. Like I said, I'll come back to this. At the moment, we just want to do the top down analysis. So a good tool to use here is to have that range to see if price is able to break below. If we can't, it comes back up. And if we see more rejection here, we can take nice sniper entries from around the top here on any fake outs that I've been showing you. Any whips up to the upside that if we fail to break out to the upside, then we can look at taking short trades down. But as I said, we've got the direction from the weekly and the daily. We know the trend is down. So here, there's nothing wrong with taking this short trade. As I said, everything is in line. We're trading with the trend in this instance, but we're now breaking above. So it should be closed above this. The trade will be invalid, and we'll revisit that. But as top-down analysis goes, the 4-hour. So then you get to the 4-hour here, and then from there we're down to the 1-hour. The 1-hour, the 4-hour, and even the 30-minute. We need to sort of chop and change between them to help build our confidences for a trade. So here you can see if we drop down to the 1-hour, forget about this price action here. If we just pushed up here, hit this trend line, you can see on the 1-hour we had this shooting star, second shooting star. Then we had this bearish engulfing, so we had this evening star formation. So this is a really good sign and a good reversal sign to take this trade. So again, taking a trade here, there's nothing wrong with it. Stops above that high and pushing down. Had 20-30 pips in profit, but we've been able to break lower. But this shows you why dropping down to the 1-hour helps get the actual entry. So from the daily, we get the direction, and the 4-hour chart is very, very good with the candlesticks to show us the direction of the market and where it wants to go next. Usually the 4-hour is very, very good in giving us an indication of where we want to go. And then once we get sort of the direction from the 4-hour, we want to drop down to the 1 hour chart, and that's where we want to look at getting entries. So the daily and 4 hour to help build your confidence on the direction of the market. And once we get sort of the confirmation from that, like we did here on the 4 hour, we want to drop down to the 1 hour and then refine our entries to look for signs and look for what I've been teaching you to take the trade. So these sort of signs here: shooting star, bearish engulfing, morning star formation with the 3 candlesticks together. We can also drop down to the 30-minute, which we also get signs. You can see here the spikes to the upside, the bearish engulfing, and even 15-minute charts. You can see here, I'll just get rid of this range. You can see here the sort of hanging man, the shooting star, just taking out the previous high here, shooting star, bearish engulfing, and then we can look at taking short trades from here. So once you start to understand how to do the top-down analysis, use the trend lines, see that price is coming out to retest this trend line here. Then if you can drop down and refine your entries, you can see here we have that bearish engulfing, and that can give you a lovely entry to take a short trade, and you can see then your pips will be up even more because you're getting in even better. But it's spotting the entries first, understanding the direction of the market, and then being able to drop down to those levels. Now, when you're on the 15-minute, you should keep flicking back between the 15 and the 30, because depending on the time of the close, if the 15-minute closes on the half hour, then it might show you a really nice half-hour candle, which can give you an extra confluence. And also, if the 15 and 30-minute candlestick closes on the hour, then sometimes it can give you a really nice hourly close as well. And if all three line up, if you've got a bearish, say, shooting star on the 15-minute, on the 30-minute, and on the 1 hour, then it builds your confidence that it's going to push down over the next couple of hours. So that's the top-down analysis on USD CAD. I'll just flick back to the chat for a minute. Does everybody understand that? This is all saved, so you'll be able to review it and take it in your own time, break it down, and yeah, so take it in your own time and understand how it works. So that's USD CAD that we've sort of just broken down from top to bottom, and I'm going to do another chart. I'll do Euro NZD, which we were looking at today. Sorry guys, I'm just looking at some of your comments. And so what I'm going to do is I'm going to just jump into Euro NZD because we were looking at that today. Okay, so let's do the same thing again with this. So very good day on this pair. We've been watching this for quite some time. Obviously, we highlighted that we were looking for a reversal since last week. Spotted it by cross-referencing with other trades. Very, very important. That all comes after the top-down analysis. Get what I'm showing you now down to a T. Understand how to get structure to your charts, how to get direction with the trend lines on the weekly and daily. Go down to the 4-hour charts, start looking at the price action, and then everything starts lining up. And then obviously when you have that on all your charts and all your charts have that structure and they've all got a direction, then when you start cross-referencing different pairs like Euro NZD with New Zealand dollar, then as they both have structure, you can see how they're playing out. So you can see that New Zealand dollars looks like it's going to reverse and pull back down to the downside. So then you can take that information over to Euro New Zealand dollar and see if there's a reversal there. That's one of the tools that we use to get in the sniper entries. So let's start with the monthly on this again. Again, we want to be looking at this area here to begin with. Forget about all of this sort of area over here. We want to be looking at what's happening right here, right now, to get a better understanding of what support and resistance we're finding in the market. Horizontal line, just throw it on the chart anywhere, and you can start moving it around. You can see we're getting resistance here, we're getting resistance here, support, and so on. Again, remember, round figures is what we're looking for. So this is this month, bearish month last month, shooting star, had big push down. So obviously it takes a lot to actually call the bottoms of these, like I am. And it's, again, learning sniper entries isn't an overnight thing. I'm teaching you how to analyze the whole market so you understand how everything works, and then you can start literally seeing what's going to happen next. You can see that this is going to reverse, so that's going to make this pair reverse. Or gold is getting weaker, so it's going to affect this pair. And then before long, literally, you can have 10, 15 pairs open up, and you understand why one is making the other one move, which is very, very rare. And believe me, not many people know how to do. So monthly, we're looking here where to get a support. So we're looking at round figures. So obviously, this is the bulk of the area here, a bulk of area of support. So we can see here we've got 1.3, 1.3550, it's a bit choppy. So we've got 1.64. Let's go to 1.64. Okay, looks pretty good there, doesn't it? Spike a little bit lower, but see the bottom of the candlestick there, coming through quite nicely. Let's see how it went back in previous. It looks quite good. Perfect resistance here in the area there. Perfect resistance here. See the top of the candlesticks, and look, perfect there again. So it's beautiful when it lines up and it works out. So again, we don't want any more than 1,000 pip range. So let's have a look here. We've got 1.64. So where is it? Let's go 1.74. Let's go 1,000 pips. See how that works. You can see it works quite well. Resistance. Come through a little bit here. We popped above. We've got resistance here. Let's look back further back. Perfect support. And you can see it's lining up quite well. So we'll go with that for the moment and see how that works. What we'll do here then is, like I said, find the midway between these 2 points using the Fibonacci tool, the 50%, so halfway, and we just put that on there. So it's obviously 1.69. Use this tool to make it absolutely 100% perfect. So we can see that on the monthly, we got this range, the top of the range, the support, and we've got this weekly support and resistance in the middle. Obviously, we can keep adding these on lower and lower, but we don't need to clog up our charts too much. This is where the monthly price action is happening. So we don't need lines here and here, like all above us, and continuing to go higher and higher. It's just going to have too much distracting our eye from the actual price action, what we need to see. So let's drop down to the weekly chart and see how these levels line up. And we can see here, if we zoom out, we got support, support, a bit of choppiness here, but we've got resistance, resistance, resistance over here. And you can see that they're working out quite well. Resistance, 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 and basically working out perfectly. You can see these levels here, support, support, support. So we've got nice structure here. We've got nice levels. So that will do us nicely. We don't need to do any more than that. Just for clarification, so you know how to do these for your own charts. I'm just going to add these on quickly now. But on the monthly, you want to do these do the highlighting tool to whatever color of your preference. and so that we know what are the monthly and the weekly, and then again you can add on to these what they are. So you can do monthly resistance 1.7400. Do the same on the monthly support, and also you can obviously add here the weekly resistance 1.6900. So it just makes it nice and clear. Those figures are there all the time, so they're in your head, and after a while they just get embedded. You just keep remembering them because you're seeing them every day. So we drop down to the weekly chart now. So we want to see, I like to really go out on the weekly chart to get a whole picture. When I'm doing top-down analysis, I want to see exactly what's going on. So here we want to try and find direction. So let's see what lines up. Let's get a trend line on. It doesn't matter if you do it wrong. Like when you're doing analysis, you're at home, you're by yourself. If you go through like this isn't how you draw a trend line. This is wrong. It needs to go from wick to wick. But let's just see what lines up. Just throw the trend line around and just see what works. So for instance, once you just start testing things, it's trial and error. You'll see what works and see what lines up. So from here, we can see one of the reasons I was looking at this pair this week. Euro NZD weekly chart, we got our direction there. We can see on the outer trend line, 0.1, 0.2, and what did I say about the third touch? It can be the strongest touch. It's the make or break point. It can be the catalyst to have a big push and push up higher, or if we do break, then we'll see a big fall down. But more often than not, the third touch is where we get that big push off, as we've made a trend with the first 2 points, and the third touch is where we're going to push higher. So we can see that now. Weekly chart looks really good on the outer. We come out and tested the outer trend line. This is the outer trend line. Should this break, then there would be huge downside potential, because there's nothing really. We had this support here, but we could keep pushing down lower. So we drop down to actually while I'm on the weekly, we can also put down on here. We can just see the weekly chart there on the downtrend, because the last few weeks, 1, 2, 3, 4, 5, we were on a downtrend. Then we drop down to the daily chart. So you can see now we've got a bit of understanding of what's happening. We can see prices come off support here. Or we can see here we come down, broke through weekly resistance, pushed back up, failed and pushed back down. Remember, we took a short from up at these levels up here. And we pushed back down. So just by simply having this trend line on, just the trend line, nothing else, even without, this is why they're so strong, even without the monthly support, resistance and so on, just this trend line, see that daily candlestick there on the trend line? See how easily it was to spot what could be happening next in the market. We had that fake out, which I'll go over again, but we had that fake out on the daily or the 4 hour, how we draw that box to then watch for how we get our entry. But you can see here just on the daily, then mixed with price action that we start looking at on the daily before we drop down to the 4 hour, we can see here 1, 2, 3, morning star formation, doji candle here, morning star formation, reversal on the daily chart, which is the time frame, which means it's even stronger. If you see a morning star formation on the 15-minute chart, it's not that strong. If it goes up to the 4 hour, the daily, it's even stronger. So here we can see we had this really nice move. And we've rejected this outer trend line, and it looks like we're going to push back up. So these are the outer trend lines. Now we want to look at the inner trend lines. So we've got this trend line here, pushing down. So sorry, this was the long term. On the weekly, you find the long term trend line. Drop down, then you have the outer trend line, which is the outer trend line here. You can see on the daily. And then we can see, obviously, we've got some way to go from hitting that at the moment. But then we drop down to the 4 hour, and that's where we get the inner trend line. The trend line that's following price closely and how it's acting now. So this is another reason to give me the insight that we were due for a pullback soon, because you can see here, we got this 4-hour trend line, and this is the inner trend line. So you can see how price has fallen sharply, pushing down, pushing down, pushing down. We're coming down here. We've retested, pushing down. Tried coming back to retest it, push down. We looked for a long trade here. Looked like we're going to break up above. This is why sometimes we just have to risk that 1%. For instance, if we looked at a trade here with a small stop loss, looked like we're in profit, but then it came back down. Sometimes you might lose that 1%. It doesn't matter, because when the trade comes off, you make 5 or 6% or even more. So you can see here, we pushed back against this trend line, kept pushing down, kept pushing down. This was on a Friday, I think. Had this breakout of the long-term trend line here, and then we quickly had a reversal. We can see here on the 4-hour, this is where the price actually comes in. So we can see now on a daily and weekly that we've come out and tapped this long-term trend line, this one here that we've just broken out of. So we've dropped down to the daily. You can see here that we've got this doji candle, drop down to the 4-hour. Again, the lower you drop down, this is where you look to get your entries. 4-hour, we've had this breakout, but then we've had this 4-hour bullish engulfing, showing that there's a change coming, showing that we've actually the bulls have overtaken the bears, and we've actually engulfed this previous candle here, and now we're pushing back up. Drop down to the 1-hour, and then you get signs that I keep showing you. Look at this, 1, 2, 3, more star formation. See how simple it is when you know what to look for, and you just keep seeing it time and time again. But the key is to not panic. Trading itself, the chart work, once you learn it, can be easy, but it's all about managing your emotions and how you manage your risk, which is what I'm going to get to in a minute. So here you can see 4-hour bullish engulfing, 1-hour, we had that lovely morning star formation. Here, drop down to the 30-minute, did we see anything? Nothing too much, nice bullish engulfing here. And did we get anything on the 15-minute? Not really too much on the 15-minute, but what we had, the 1-hour and the 4-hour charts that showed us exactly what we wanted to see. So you can see here now, we were broken out of this inner trend line. It was really, really tight. Price kept coming back to, was hugging this trend line, trying to break it, trying to break it, trying to break it. We weren't pushing away. We weren't finding resistance off the trend line. We weren't coming here and then pushing off because we were finding lots of resistance. It was hugging it closely because it was about to break. So you can see here then we broke above it. And once we had that strong break above here and even the next candle, then we've never really looked back. Then, as I said, what happens when you break the inner trend line, then what we do is we look to go and hit the outer trend line, which is here. And then once we get to that level, should we break this, then we'd be looking at hitting the long-term trend line. I'll just put this back on again. So these are the three. This is a good example of the three trend lines. The long-term, the outer, and then the inner. Drop down to the 1-hour again. So as explained, once we break the inner trend line, what we do is look for price, holding on to price, letting it swing, letting it go up and down, letting it do whatever it wants. We've got a stop loss at break even. Normally we see price then come up to retest the next trend line. Then, as I said, if we break that, if we were to break this, then we were looking at to come out to the long-term trend line. So this is sort of the setup that I was looking at on Euro NZD. And now we'll just run over a little bit of what exactly we saw today. So when I say don't panic, here we saw the reversal signs. Lots of you got sniper entries from down here, but we always come back for a pullback. We have to come back in order to go up higher. Very, very important thing to learn. Never panic, never rush. When you see this pushing up, I would never ever enter here because it's almost like you've missed the boat. We know that there's going to be a pullback. We've had a little impulse, whether it's here or whether it's up higher. We're going to have a pullback, and that's where we can look for our entry. Now, you might have noticed one more thing line up here. In this morning's call, I said to look back for a pullback into this region. The news was coming, so I knew there was going to be a bit of manipulation. But do you see also how we've tapped that trend line again? We've broken the trend line, we've come back inside it, We'd come back to sort of retest it one more time to bounce off that and push back up. But we came back, we retested that 61.8% Fibonacci level perfectly. And as I said today, would have been very hard to grab that trade. Unfortunately, because it was the news, we dropped down to the 15-minute or the 30-minute. The 15-minute, we had this nice bullish engulfing candlestick, the price action that we wanted to see after finding support at the 61. But as I was typing this to the group, we went from here to here within about 2 minutes. So it moved so fast. But don't get disheartened if you miss this trade. It's all about learning. We're all about learning here as much as anything, so that you can see these and do them time and time again. But what you have to remember here is that this candle was very, very, very bearish when it was down here. So if you didn't take the trade, there's nothing wrong with that, because if you had just jumped in blind without seeing the support on the 15-minute, then you would have been gambling. And you have to remember that when this was coming down and it was very, very bearish, there was nothing to stop this from just keep going down, down, down and hitting your stop loss. So there's nothing wrong with not being in that trade. If you did get it, well done. But as I said, don't beat yourself up about it if you missed it. And again, there will be more opportunities. Just because it's up here doesn't mean it's going to just keep skyrocketing. It has to come back. And then we will be looking at entries on something like here, the third touch of the trend line. We may come back down, retest this, and from here we might have that catalyst to make us push up higher. So there's always loads of opportunities to look for. So don't worry about missing any trades. It's better to miss a trade than to lose a trade. But remember, you're learning all the time. So there you see the top-down analysis from the monthly, weekly, daily, 4 hour looking at price action, and then on the 1 hour looking at the price action as well. See that lovely morning star formation there. Also then, what you would be throwing to the mix is the formations. When we see the head and shoulders movements, they're an added confluence. Nothing really showed up here, but that's something that we'll go over more and more. But that's the top-down analysis basically on 2 charts there for you. So I think that covers that. Let me just go back and check how the group is doing at the moment, just to make sure you can all hear everything. How's everybody finding that? Are you understanding it? So that's the top-down analysis that I've showed you on 2 charts now. So what I want you to do is I'm going to do another webinar next week to make up for the lack of one last week. Obviously, you know, I look after you guys, never miss a morning call, evening call. If there's a reason that I haven't done something, there is a reason for it. So I'll always look after you and give you much more than expected. So that runs over the monthly support and resistance. Now what I want you to do is use what I showed you, use it on, clear your charts, do what I've done, practice it over the next week or over the weekend when you're doing your own analysis, your Sunday analysis, or whenever you do it. Choose all the charts, do everything that I've showed you, do the highlighting tool, highlight the monthly levels, get all your charts up to scratch, and then we'll come back next week and I'll do another couple of pairs and we'll see if yours lines up with mine. But that's basically top-down analysis. Nothing major to it. It's quite simple once you know how. But obviously, you see me trading with clear charts sometimes because I do like to keep it as clear as possible, because price action is one of the key things. And just knowing the key levels off the back of your hand, when you've been trading for so many years, the levels, I just know them in the back of my head. I know where Euro USD is, I know where USD CAD is, I know the levels, so I don't necessarily need them. But like I showed you, if you label them and they're on your chart, you'll look at them every day and you'll get to know them. So that covers that. So the next thing I wanted to go over is basically one of the very most important things that I keep telling you, which is risk management. So guys, the rules of our group are every time we're in a trade, we're often getting in at the bottom or at the very, very top, as you're well aware, to snipe our entries. We're getting in at a very, very good level. We're getting in before everybody else. We're up 100 pips before everybody else is, before other people even start looking at the charts, and it's a specialist thing to know. But it takes risk management to make it work. If you over leverage or if you gamble, it's just not going to work. And that's not just with sniper trading, it's with all types of trading. If you're going to be a trader, if you're going to stick in the market long term, if you're going to be successful, you have to have risk management. Now, I say in the group 1 to 3% risk per trade. I still only risk 1% on a main account. Serious trading, you risk 1%. I say 1 to 3 because some people have bigger accounts that they're more advanced, they want to risk a higher percentage, but I recommend only risking 1%. Now, there's various reasons for this. One is that we can have 5, 10 trades on at once, especially if you're in the group for a couple of weeks or a couple of months or even longer. We're holding trades as well. So we take 50% profit, but you still have 50% running. So you're using up some of your risk there. And then we've got new trades on. So you could have 5% running, 10% running at any one given time. And that's as much as your account ever should be running at. Obviously, those trades often are in profit or running in profit, so there's not really much risk. But still, 1% per trade is the key to basically being successful. One of the other main reasons for it is it's because of your emotion. Now, like I showed you on the charts can be very, very simple when you want them to be. Anyone can sometimes read a chart, but not everybody can trade. Trading is very, very much all down to each person. Every person is different, but it's all down to emotion. And market is about emotion. You see the market moving in ways. You see people getting stopped out and stuff. You can sort of see emotion in the market when you've been trading for quite some time, and you can understand how the market moves. You see the manipulation spikes. You see the breaks lower. It's just to get people out the market, and when people jump out the market because they've over leveraged, they're in a big loss and stuff like that. All of those mistakes that we've all made at the very beginning of our trading, all of that stuff needs to be cut out. You have to learn to be very, very strict. Take emotion out of the game. If you're trading, if you've got a trade on and you need to check your phone every couple of minutes or every hour to see where that trade is, that's the problem. That's where your mind isn't thinking straight. Your mind's all over the place. You're not seeing the market for how it should be, or you can't see the charts with clarity. Your emotions are caught up with the money. So you keep looking at the money, you keep thinking about the money, and then your whole trading plan and your psychology goes out the window. With the 1% rule, you'll keep your emotions in check. It gives you so much more flexibility. Even if a trade goes against you 20 or 30 pips, you can even maybe add another position if needed. But that's very rare. But it just gives you so much flexibility that you don't worry about trades. A few meetups that I've done and I've spoken to people, a good example that I told people was when I first started trading, or when I first started getting good at trading and I was making money, I used to use £1 a pip. Going back years and years and years ago, I started trading with £1 per pip. Now, I used to place nearly 10 trades in a row with £1 a pip, and I'd win every single trade. Every single trade would be about 200 or 300 pips. Obviously, I had losses, but I'm just giving this as an example and try and make you understand. I used to get 200, 300, 400 pip trades all the time. So then I'd say, well, okay, I'm making 8 out of 10 trades. I'm winning 8 out of 10 trades. I'm making 100, 200 pips per trade. If I went up to £10 a pip, I'd be making this much money. So I'm going to do that. I'm going to over leverage. I'm going to put £10 a pip, and then I place a trade, and the very first trade, literally, I would lose, and I'd blow an account, and all those sort of things that everybody does at the very first year or 2 years of trading. And I couldn't understand why I could get 5 to 10 trades winning at £1 a pip, but as soon as I'd have a £10 a pip trade or more, I'd lose every time. And it's because of one thing, which is your emotion. Believe me, a lot of people in the group have already told me, you've gone down to 1% risk. It takes your emotion out of the market. They've never seen as many pips stacking up at one time, never been making so much money, and never been so relaxed. And also, having only 1% risk also lets you take more trades. Sometimes there's trades where if you're over leveraging, you're scared about taking a trade because you think, oh no, I'm going to lose money. Again, biggest problem, you're already fearing the market before you've even actually got into a trade. Fear is one of the biggest problems. If you fear the market, you're going to lose. So you have to have no fear. You trade with 1%, you'll take a trade because you like the setup, you see everything adding up, all the confluences adding up, and then you can take the trade, take the 1% trade. If you lose the 1%, you don't care, but the risk reward, the risk might be 1%, but the reward is 5%, and so on. And then you become a better trader because you're taking more trades, you get more confidence, and believe me, it just helps so much better. So that helps your patience, which is the next key thing. If you're emotionally attached to a trade, your patience goes out the window, because if you're having to look at your phone or check your charts every 10 minutes or every hour, your patience is wearing thin. You're getting, every time there's a move against you in the market, or you see that your money's going down, or you're worried, your patience wears thin, and again, your whole trading plan goes out the window. So risk management is key. So our rule guide is, once we're 30 or 40 pips in profit, our stop loss always goes to break even. That means that should the market move against us from 30 or 40 pips and go the other way, we more than likely want to be out of the market, because if the market moves 30 or 40 pips in the opposite direction, then we should get out of the market and we should stand aside. Let things happen. Let's see if the opportunity is there to re-enter. But it's better to be out of the market than to be in a loss. So we never let a winning trade go into a loss. That's another key thing that you need to learn. If you're 30 or 40 pips in profit, don't let a trade come against you and then go 10, 20, 30, 40 pips or even more in a loss. If you're in profit, stay in profit or come out at break even. Don't go into a loss. Come out of the market at break even and then jump back in at the right time. So stop losses to break even after 30 or 40 pips. And then the rule that we have is every time we hit 100 pips or our first target, but our first target is usually 100 pips or more, is we take 50% profit and then we keep our stop loss at break even. And as you've seen on trades like Euro GBP, Euro NZD, Euro AUD, we can continue to let those trades run and gather more pips and not be emotionally attached. And you'll be amazed that if you stand back, don't check your phone every day or every hour, let the trade do their thing. You come back a couple of days and you'll be amazed at where your trades have got to, because you're not watching them, you don't care about them, and they're just stacking up money. They're going in the direction that you thought they were, and you're risk-free and stress-free. So they're the three main things: risk management, patience, and the self-discipline. So that is basically the key things that I wanted to cover today. As I said, I'm going to do more webinars. I'm going to do another live webinar next week. So I'll run over some more top-down analysis and see if it lines up with some of yours. If there's a few questions, I might answer some, but I've gone over the main things now. As I said, the main principles of the group: risk management, patience, self-discipline, and how we manage our trades. I've shown you now how to do the top-down analysis for monthly, weekly, daily, 4-hour price action that we've been teaching you. So pull it all together. We'll keep working together, and yeah, and we'll keep getting better and better. Yes, next week we can look at entries a bit more. I'll make you understand them a bit more. Today was me covering the key aspects, which is the foundations, and was also the most requested. So the foundations of your chart work is the monthly levels, and which I've shown you. So that's the first thing that anyone really needs to learn. If you go to a course, wherever you go, well, not wherever you go, because a lot of courses don't teach you anything, but that's what you need to learn. That's the day one. Support and resistance is your the first thing you need to learn. So that's why I just wanted to start on that today. And we're going to be doing loads and loads of webinars. These live streams now, we can jump on these a lot more often. So there'll be a lot more interacting between me and you, me and you guys. So yeah, there's so much stuff that you're going to learn, so much education. You can see that when I start talking about things, I just keep giving out loads and loads of hints and tips. So yeah, look forward to loads more coming out over the next couple of weeks and months and so on. Good to hear that it's helping people. That's the whole point of this. It's good to see that so many people are learning and so many people have increased and got so much better so quickly. First meetup, basically, I'm looking into places at the moment. Again, when I do things, I do it right. So I'm looking at hopefully the end of September, October. I'm looking for the right venue. I want it to be good. I don't want to say too much about it and give too much away, but that's an additional thing that's just for free for everybody. It's going to be a free meetup in London, and then there'll be free meetups in other places as well. So all over the world, don't worry about having to come to London. I'm going to be coming out to you. Yeah, we're going to be doing lots of free meetups. So it's going to be good to meet loads of you guys. One of the reasons for the meetups is basically we're a community, so I want you guys to meet each other and become friends. One of the things that I never had when I started to learn how to trade was I didn't have any friends that traded. I didn't have anybody that was interested in trading. Remember, I started about 10 years ago. Obviously, it's a bit more known now, but still, a lot of people that are trading just don't have anyone around them or don't have the right community around them to bounce ideas off, to talk about trading to. So this point of the community is that if you come to the meetup, there'll be people at that meetup that live in your area. You can talk to each other on Instagram, meet up in the future, bounce ideas off each other, become friends. And so we all become a community and basically just keep getting better and better. Withdrawals, how often do I do it? With withdrawals, I normally like to do it on a weekly basis because some people do it on a monthly basis. I like to do it on a weekly basis. When I was younger, I started as a labourer when I was 16, and that's what I done. I was a labourer when I left school, and I used to get paid weekly. I used to get my wage every week. So I was never in a job that was a pay monthly. I was never in one of those type of jobs. So I always got paid weekly. So I just kept to that habit. So every Friday, at 5 o'clock before the market closes, or before the market closes, I take a withdrawal, let that hit the bank, and that's like me paying myself. It's me paying myself a wage. So each to their own, but yeah, I do it weekly. A lot of people are asking me about pending orders. I do not use pending orders. Obviously, they can be good, but I always execute the market live. I don't like pending orders because, for an example, today with Euro NZD, if we had a limit order at the 61.8% retracement level, yes, that would have worked perfectly. But what if the Euro news was really, really bad and we just synced? It would have hit your entry and it would have took you out before you even looked at the chart. So you could have lost 100 pips or whatever it was just before you even looked at the chart, because the whole move would have happened. So no, I don't use limits. Broker recommendations I'll go into another day. I don't like recommending brokers because everyone here is from all over the world. Everybody's needs are different. Everybody's wants are different. And you know that brokers are funny and sometimes you can have problems. So I don't want people coming back on me when there's a problem because they got taken out of the market stuff. Everybody needs to do their own research into their own brokers, maybe from the country that you're from, and look at the reviews and see what's best for you. Okay, guys, so I think that's going to wrap up the webinar for today. I hope that's helped. Remember, these are going to be coming a lot more, so there'll be another one next week, so we can look forward to that. If you've got any more questions, you can send them to me on Discord and so on. But yeah, I hope that helps you today. We'll go over more next week. We covered the foundations, so now we can start to move on to more advanced things each time we have a webinar. So I'm going to save this as well, and so you guys can review it. Thanks, guys. See you later. Bye-bye.